Good morning, traders. Welcome to the live stream. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. If you are new to the channel, you're new to Bookmap, hit that subscribe button. And if you're new to the video, hit the like. Smash that thumbs up button. Let's spread the word. Let's tell that YouTube algorithm that Charles is awesome and that it should send some more people my way. All right. Well, a lot happening here in the markets recently, so I'm going to do my best to digest this and give you guys some trade ideas for the day and the week moving forward. So first and foremost, let's just start by kind of asking a question: what has been happening? By understanding the context of how we got to where we are, it can help us to have an edge in terms of, what to expect coming next. Okay. So we had a lot of momentum last week. We had a major gap up, a very large gap that we made little to no attempt to fill, and then immediately started to create momentum up. That momentum continued all the way into Friday. There was a chance on Thursday where the market made a lower low, and that was a chance for the market to pull back. That was a chance for the market to, run out of steam and head back down for the gap that they had left behind. But the important thing is that is not what happened, right? When Thursday tried to dip below Wednesday's low, all the market did was bring in a bunch of buyers and say, absolutely not. You are not going lower. We refuse to allow it. So what did the market do? It turned around and it started heading back up again. And by the end of that day, we had spent most of the day and brought in most of the volume above Wednesday's range. That's very unusual behavior. That is a sign of buyers. That is a sign of momentum. That is a sign that the sellers, there is no desire to take this market lower whatsoever from the sellers. So then Friday comes. And at the end of the day, at the market close, we were all the way up at the highs. We were way up there. The market had made a big move and it even closed with a spike up. Everything was looking so bullish. And then as soon as the closing bell rang, the market started this sell-off. Well, there's two different influences, I think, that led to the sell-off happening the way it did. The first is one we were discussing in the brigade last week, which was the options market makers being heavily hedged, right? Because the market had momentum up, there were a lot of people buying calls in all sorts of different stocks. There was just a lot of call buying last week from market participants. And that causes market makers who sell those options to hedge, right? To be protected in case the market goes up. Well, once they don't need to be protected anymore because those options expire on Friday, well, then they take off those hedges and the market goes down. So part of this is going to be that, and the other is going to be the Moody's downgrade. Okay. Now, do I personally think the Moody's downgrade really matters at all? No, I don't. But everything in markets is about emotion. It's about what a new piece of information causes the market to do. And in this case, it's sold off, right? But again, I just want to say the sellers had such an opportunity to take the market lower, and look at where they stopped and reversed and started coming back up. The same exact place where we had that reversal on Thursday of last week. They tried to take the market lower Thursday of last week, and the market said, no way, absolutely not, and began its momentum up. Well, they just went to that same level again in the overnight. And so far, the market said, no, absolutely not. And it reversed and started pushing back up. Now, it did not get quite the momentum it did the last time. The last time we got all the way up here to the 5930s and spent time and brought in volume there. This time we only made it to the 5914, area. So that's not quite as much momentum, but it is a sign that somebody is defending this area around the overnight low, around the 5890s. Okay, somebody is defending this area. Somebody does not want to let this market go lower. So how do I carry all of that information forward? Okay, great, Charles. You've laid it out for us. The market had tons of momentum. That momentum is run out. So what do you think happens next? Well, I think the straight move to the upside is over. Okay, I think that Friday's high is probably going to hold for a little bit here. Okay, so the question to me now is, the market needs to balance. It needs to balance off this big move. How is it going to do it? Excuse me. I think I just swallowed a book. I think a little tiny gnat just flew in my mouth while I was talking and into the back of my throat. That was horrible. Okay. I do not like that. Anyway, so there's two ways to balance off this momentum to the upside. We can either go sideways and spend time up here, and that time allows the market to balance off the momentum, or we can get a pullback with price, which would imply we may even need to pull all the way back to filling that old gap. Okay? So which of the two am I right now on Monday morning thinking is going to happen this week? The balance with time. I think we're just going to go sideways up in this range. The cool thing is I can use Thursday's low as the level to tell me if I'm right or wrong. So very simply put, if the market comes down to Thursday's low, gets below there and turns around and starts coming back up, then I would assume this is about to become a balance area with time. And we're going to start spending time going sideways inside this range. If we got below Thursday's low and then we got new selling down there, well, then I would be bearish for that larger pullback with price. Okay. So when the opening bell rings this morning, what am I doing? Well, it's a little bit complicated, right? Because I'm assuming that the market is going to want to go lower today, at least to see if there's any appetite for the regular trading hours to do business down here around the overnight low, around the 58.90s. But we also have a gap. So whenever you have a gap down, the first order of business, the first thing the market will try to do in the morning is fill the gap. And I think this gap is fillable. I don't think this is such a big gap that we need a gap and go to the downside. So when that opening bell rings, the first thing I'm thinking is the market is going to try to work its way back up to 59.25. Okay. If it cannot get up there, then I want to get bearish for the market to come down and test the overnight low around 58.90. Okay. So if they cannot get to 59.25, if they try and the sellers just smack the market down, I'm looking to test that overnight low. First thing in the morning, that's what I'm thinking. Okay. We either get a gap fill where we get to yesterday's low, or we get a gap and go where we head to the overnight low. Okay. So that's step one. Let's say the market fills the gap. Let's say it gets to Friday's low, 59.25. If that area right around there becomes resistance, then I become bearish to come back down and test 59.06. Okay. So if the market opens and it can't get to Friday's low, we're instantly bearish all the way to the overnight low. If it can get to Friday's low and it gets resistance, we're bearish just to come back to the base of these single prints, 59.06. Okay. And then we see what happens when we get there. If the market opens and it fills the gap and it does not get resistance at Friday's low, it continues to push up into Friday's range. It starts to spend time inside Friday's range. It starts to bring in volume inside Friday's range. The ticks stay positive inside of Friday's range. If I'm seeing all of these things, then I look for momentum up towards the overnight high. Okay, which we'll just call it the 59.48 area. Okay. So to me, one of those three things is going to happen today, or one of those four things. Thing number one, the market opens and instantly starts going lower. Thing number two, it fills the gap, then turns around and starts going lower. Thing number three, it fills the gap, does not find resistance, works its way up to the overnight high. One of these three scenarios is going to play out this morning. Okay. Now, I'm not saying it's going to play out the minute the opening bell rings, because I now think we're in the middle of a balance area. And what does the market do when it's in a balance area? Intraday on a given day, what does it do when it's in a multi-day balance area? It chops and it grinds and it reverses over and over, and it makes you think it's going to break higher. Everything looks like it's going to break higher, and then it sweeps the order books and it heads lower. It looks like it's going to go lower, and then it sweeps the order books and it heads higher. Trading inside a balance area is always more difficult because reversals can take place anywhere. So as a intraday trader today, the first thing I'm focused on is the market trying to fill the gap. I feel no need to force a gap fill trade right away. If I don't feel comfortable that the market is definitely going to fill the gap, I don't want to be going long this morning. Okay? So I'm going to take my time. I'm not going to force any entries. And if one scenario starts to play out, if it looks like it's a gap and go, and it looks like the market is just going to continue lower, I can get short and I can trade that. But if it suddenly shifts and it doesn't look like that, I want to be able to shift very quickly. Because when the market is in balance, it's not guaranteed it's going to make it to your targets. So as I said, the first target for a gap and go to the downside is the overnight low around 58.90. Okay? But if we can't get there, I'm going to change my mind. Okay? Because this is balance. So again, I just want to emphasize to everyone, the two most important levels for today is going to be Friday's low around 59.25 and Thursday's low around 58.90. Okay? These two areas will tell us what comes next. If we get resistance at Friday's low, we're going lower. We're spending time inside this range. If we get a look below and fail of Thursday's low, or we just get support above it and we don't get to Thursday's low, we're going sideways with time. Either one of those scenarios means we may have a whole week of going sideways this week for all we know. Okay? It just means we need to spend time going sideways. If we get above Friday's low with new buying, we're bullish once again. And if we get below Thursday's low with new selling, we are bearish for a much larger pullback. These are the areas we want to pay close attention to. We may not get to either today. We may get to both. I'm relatively certain we're going to get to one or the other, but anything is possible, okay, because the market is in balance. So we could just have a bell-shaped curve that goes sideways just like Wednesday in the exact same range. This could be a go nowhere day. This could also be a massive sell-off, huge move to the downside day. And we just won't know until we get to either Friday or Thursday's low and see what the market does when it gets there. So there's no reason to force trades in between unless you feel extremely confident this morning with the momentum one way or another. Any questions on any of that from the chat? Any questions? Also, if you are joining me from the Discord, you can always go to the Futures-Charles tab and we can hang out there. Okay, so if you want to ask me a question or make a comment or tell me that you hate my face, you can jump into the Futures-Charles tab, leave your questions there. If for whatever reason throughout the live stream I don't answer your question, I will go in and manually answer it later on in the Discord. Okay, if you are watching from YouTube, just use the comment section in YouTube, and I'll be keeping an eye on that throughout the stream, and we'll be happy to answer any of your questions. Okay. So far, we got Billy K hanging out. Rich is here. Sheena's in the house. Patrick is here. He says, "Hey, brother, you got the first like from me." Well, I appreciate it, Patrick. Let's see if anyone else joins that party. Joins the thumbs up party, which is what all the cool kids do. I mean, that's what all the cool kids do. They show up and they like and subscribe and turn on notifications and send me their social security number in the mail. It's just what the cool kids do. Okay. Kiwi is here. Good morning to you. Tom in the house. Welcome. Will is here. He says, what charting software are you using for TPOs? Is it Sierra? It is not Sierra, although I have heard good things about Sierra's TPO charts. It is not Sierra. It is a company called Window Trader. Window Trader. If you are curious about what you are looking at on the screen and you don't understand what any of this is, and you're like, Charles, this is crazy. This is insane. What, are we flying an airplane? What are all these numbers and letters and things? They're very confusing. Let me explain. So the chart on the left side of the screen is a market profile chart. So it's basically the same thing as like a candlestick chart. It's just we place the information in a way that we can glean a lot more from it than just from candlesticks. So I describe candlesticks as being like a two-dimensional view of the market's information, whereas market profile gives us a three-dimensional view of the market's information. So what we can see with market profile, if we look at the letters, these are called TPOs. They let us see where the market spends the most time. So quite simply, where you see the big chunks of letters all together, that's where the market spent the most time. Okay? Wherever the most letters are, those are going to be the areas where the market spent the most time. The areas where you see the biggest chunks of volume, they'll be the darkest color and the largest in size. Those are the areas where the market traded the most volume. And so by being able to see, of course, we can see what candlesticks show you. We can see what the high and the low is and stuff like that. But beyond that, we get to see individual levels where things change. Individual levels where participants begin to buy the market or sell it. They begin to get squeezed if they're already long or short. And that three-dimensional view, that is really my edge in trading. That is the advantage that I have, is that I can see things that other people cannot see. And so I can take trades that they're not aware of. So an example of that is what we just talked about, right? When we look at the lows from last week, let's say we're really interested in this area right here. We're curious. That's where the overnight came and reversed. If we were looking at a candlestick chart right now, all we could see was that the candle went down to there and then turned around and came back up, right? So, but why? Why did the overnight reverse at that level? What's so important about it? Well, when we look at the TPO charts, what do we see has happened in the past when we were in these areas? Okay. This is where volume and time tapered off on Thursday morning. This is where the market could not go any lower, meaning buyers were waiting to buy the market right here. Well, what about the day before? Same thing. Taper in volume and time. This is where buyers were buying the market before. So surprise, surprise, even with this terrible news, the world's coming to an end. Moody's has downgraded us. Where did the market find support? In that exact same place it did on Wednesday and Thursday of last week, which is why we should assume whatever's been happening since Thursday or Friday of last week, which is momentum up, right? It's still happening. It's not over yet, which is why we're not looking for that big, huge pullback in price. Everyone else might open up their chart this morning, see that we have a gap down, and they're like, the world's coming to an end. Short it, short it, short it. But we know that statistically, in terms of probabilities, a short right now really only has a chance of getting to that overnight low. Because on Wednesday, there were buyers there that wouldn't let it go lower. On Thursday, there were buyers there that wouldn't let it go lower. And yesterday in the overnight market, there were buyers there that wouldn't let it get lower. So if we want to short with the momentum, we can, but we know where we want to lock in profits. That's our edge. We're not staying in the short for too long. We're taking those profits. In the same regard, if we get below, Wednesday's low and get new selling, or Thursday's low and get new selling, well, then we can short again. So we can take profits and re-enter based on understanding where this auction might change. Okay? In the same regard, we might choose to do nothing. Because we know if the momentum up is over, it's either going to go sideways or down. And this is telling us sideways is more likely. So maybe we just choose not to get into a short because it's not worth the risk, or even get into a long to fill the gap. Okay? So this information, this three-dimensional view of the market is the edge. It is recognizing things that other traders are just unaware of. So you can get in the trade before them, or you can lock in the profits before it reverses, whereas they have no clue where it's going to reverse because they're seeing it in two dimensions. They can see that there were candlesticks down here, but they don't recognize the volume tapering off. They don't recognize that the market could not spend time down there. And so they don't understand the power of these lows. And they don't understand that it's not one exact level, which is all you can get from a candlestick, the exact higher low. It's a general area. Just look at it. Very thin over here, passed right through it, never came back down. Support, support, support. Fairest price, support. So then we know how to look at the market. Not to target an exact move to an exact level, but this is a general area where the market is likely to poke down there. And if it can reverse and come back up, we know it's going much higher. And if it cannot, we know it's going much lower. That's what we use the market profile for. Now, when we're over here and we're looking at the Bookmap, you're going to see there are two charts that I'm clicking back and forth between here. One says ESM5 CME Rhythmic, and one says ESMM5 CME OCF BR at TM.pro. Okay, so the first one, this is the actual futures and the order flow of the futures. Now, you can notice there are these bracket bots. Okay, so this is a set of algorithms that just always keeps a large node of liquidity above and below price. And they do this to throw off other computers, other algorithms that are trading the market that use order flow to execute trades. This makes it very hard for those bots to execute because it's hard for them to know, what is real volume and what is fake, what is going to get pulled. This liquidity never gets filled. It will always disappear before the market gets there. It is just there to distract other algorithms. Okay. So when I'm looking at this chart, I'm really just looking at my stops and icebergs, which is an add-on to help me understand who the participants are and where things are happening. If I want to see the actual order flow itself, I will click over to this chart right here, which uses TraderMap Pro. So anyone who has Bookmap has access to TraderMap Lite, which is the free one, and TraderMap Pro is just another version of the same thing. Okay. And what it does is it filters out those bracket bot orders. It filters out those market makers so that you can more clearly see how the order flow is changing. So for example, earlier this morning, you can see they started to disappear liquidity up here. And at the same time, they started to add liquidity down here. Do you see that? And what did price do as a result? It moved away from there down to here. Okay. So right now, the liquidity is acting more like a magnet to pull price to it. And we'll see what happens. So that's what we look at, is those changes in liquidity. And that's what I use Bookmap for. Any other questions? We got 4 minutes until the market is open. Jay in the house, good morning to you. He says, is this relevant for natural gas and the 30-year auction? Yes. So any chart that you would look at on candlesticks, you can get more information by looking at on market profile, like just straight across the board. Any financial asset that has buying and selling, seeing where that buying and selling happens is an edge in that market. Kiwi. Let's take a look at Bitcoin as well. Bitcoin. Sure. We got a couple minutes. Let's take a look. Bitcoin. Okay. When we were here last week and somebody asked me about Bitcoin, I said all-time high incoming. We didn't quite make it there. And the corn is now in balance. But obviously, I think the target is the all-time high and probably much further than that. Probably eventually, again, you can't time Bitcoin, but eventually I think the 120s is in range. But for now, it's in balance. And how it's in balance, let's look at this range right here. And then let's just look to the left. The last time we were here, when we made those new all-time highs, this is the exact area where the market bounced for, almost a month. It went sideways in this range. So it would not be unreasonable for the market to go sideways here for a little bit before it kind of pokes up and starts to make those new highs. What you don't want to see in Bitcoin if you are long the asset, is you don't want to see a dip below 100,800. Okay? So 100,800, that is the low they want to hold. If they get below there, that's what could cause the market to start to pull back down into the 90s. Okay? So they want to stay above there. I'm also noticing it's very subtle and it's just begun, but there's a little bit of a channel happening here. So if the market can reverse today, like in the next few hours, if it can reverse and start heading back up, there's no reason why it can't head back up to, 106. So that's a $4,000 difference and they could do it today. It will all just depend on how we handle this balance area up here. So remember, the last time this broke, big sell-offs, big moves back down into the 90s. So they really want to hold these lows. But I would say I am bullish on the corn longer term. 1 minute till market opens. Can you feel the excitement? Kevin in the house, good morning to you. He is saying, what would be the next key level below Thursday's low? So it is the week reference at 58.63. So if we get resistance at Thursday's low, if the market pushes all the way down below 58.84 and it turns that into resistance, then we know we're getting a bigger pullback with price. And we do what we call monitoring for continuation lower. So the resistance would tell us we're going to the first week reference, which is here at 58.64. That might be all the market needs and it reverses and comes back up. But if not, if it gets below there and gets new selling, we target the next week reference. That might reverse. If not, the next, so on and so forth, all the way until the gap is filled to 57.10. Now, I do not believe that that is what the market is doing. I do not believe the market is going much lower. I think the lowest we will go is Thursday's low and then turn around and come right back up. Because right now, that's what all the signals are telling us. They're telling us balance with time. They're telling us we don't need that bigger pullback. So it would only be with the new selling below 84 that I would then target that move to 63. Not now. And as a matter of fact, it looks like the first move is to fill the gap, which is, of course, what I predicted. So now the level we're watching is Friday's low. And that's the gap fill at 59.25. If the market gets resistance there, we look for it to turn around, come back through the opening price, and test support at 59.06. If there is no resistance there, we look to continue higher to head up towards the 59.40s. To resist or not to resist Friday's low? That is the question. And remember, we're in a balance. We're in balance area. They love to reverse exactly 1 point away from filling a gap when the market is in balance like this. So if you're a gap fill trader, you might consider taking profits 1 point before the gap fill. Because if they reverse right at, 24, it's going to drive you nuts. And that is certainly possible. One thing I'll be very interested in seeing as the market pushes up into Friday's low, 59.25, is do we take out a bunch of stops there? So was there somebody with large size shorting in the overnight over the weekend? If there is, they will start to get stopped out as we re-enter Friday's range. So I'll be watching this stops settings here to see if we start taking out large orders. Good morning to Kevin. Clean balls for you. Good morning. Street Salsa is here. Trevor in the house. Zedla came here for the Bookmap Discord only code and listening in on your analysis pretty much lines up with my outlook and key levels. Well, then we are on the same page. Zed? Good morning to Sniper Trader. Luciano, I'm probably saying that wrong, sorry. He says, do you use stops and icebergs with specific number of exacting trades? I can tell you what my settings are. I have the settings set up so that it's only showing me, bigger stuff. So for icebergs, the threshold is 30 contracts. And for the stops, the threshold is 10. And what is the other thing? Price aggressor 20 and time aggression 1. It's not that I necessarily think there's anything exciting about my settings. It's just it only shows me the larger stops. So for example, at 59.20, one person got stopped out for 170 contracts. That's a pretty big amount. Somebody else just got stopped out when we filled that gap for 270. So what that tells me is they're going to take another poke at the high, right? If they don't start taking out somebody with more than 270 stops, if they don't start taking out even more stops, this market's going to reverse and come back through the opening price. Okay? Because the push up to fill the gap was to hunt for stops. So if that's it, if we just took out the most stops we were going to take out, then the market turns around and starts heading back down. Now, if they get another poke up and they take out another 200 stops, another 300 stops, another 400 stops, well, then the move up continues as long as we keep squeezing sellers. So that's what I'm watching for right now. Does this low from Friday become resistance? Or do we spend time and bring in volume inside Friday's range? The moment of truth is here. What's it going to be, market? Ticks are saying we could easily spend time in Friday's range. Do we have the stops? Do we have some more big sellers that we can squeeze to keep us up here? Let's find out. Okay, so you can see that's more shorts covering that, those little pops, those little fast pops up. That stops getting taken out. Still nothing exciting. Still haven't taken out anybody for 200 contracts. Haven't taken out any big boys. All right. Well, I am bullish to head up and test some resistance up here in the overnight range. We have now spent enough time and brought in enough volume inside yesterday's range that we can keep the momentum going. So obviously at this point, the market wants to stay inside yesterday's range if it's going to keep going higher. So if at any point it reverses, gets back down below 59.25, then it loses its bullishness, right? Because to stay bullish, it wants to keep bringing in new buyers and keep working its way higher from here. Okay, so I am bullish as long as we stay above yesterday's low. To give it a little breathing room, I would say as long as we stay above the half back. I am bullish above 59.22. Okay, my first target to the upside is going to be this resistance right here around 59.38. Then up here around 59.44. And then we watch what happens at the overnight high, 59.49. Okay. If we get above there and get new buying, we're bullish for continuation higher. If not, we look to reverse back down. This is a little confusing because it has separated out Friday's range and the range from over the weekend. I'm just calling this the overnight high, the range from over the weekend. So if they're going to keep the momentum going, they will turn that into support. My guess is they will not. My guess is we're going to get some resistance here and then pull back down. But for now, the momentum is up. Let's see how far they can push it. So we got more short covering. Let's go check our stops and icebergs. Okay, that's not huge. Only took out 86 stops. We can do better. Come on, there's somebody with 400 contracts short ready to get squeezed. We got to find that guy. What's his squeezing point? Where can we take him out? That will be the high of the day. And we haven't found it yet. No questions from anybody in the Discord so far today. Quiet ass Discord. We got a question here. What does the E numbers on the Bookmap chart mean? So that is part of the stops and iceberg setting. When you see those, the little triangles, that's the sign of an iceberg, meaning somebody's trying to hide the amount of contracts they want to trade at a particular level. When you see the E next to it, that means executed. It means they're done. They've filled all the contracts they're going to fill. If it starts to fill and then they cancel it in the middle, it'll put a C there. That'll mean canceled. And if you look at the current, so we now have an iceberg at the, we just created. So you can see there are 4 contracts that have traded hands. That's what the 4 means. And the number inside the bracket, 1, it means there's just one account doing that iceberg. Whereas sometimes you can have 10 accounts doing an iceberg at the exact same level. Okay, so I would describe this move higher so far this morning as being mostly shorts covering. Okay, what this is a lot of people were super bearish into the weekend for whatever reason. Could be the Moody's news or whatever it could be. That got a lot of people short. Now those people are being forced to cover those shorts, right? Because they're wrong. The market opened, it filled the gap with no problem. I mean, no resistance. It got inside yesterday's range, and it since then has had no resistance, no selling. It has just been more shorts covering, more shorts covering, more shorts covering, more shorts covering. And so sometimes when this sort of thing is happening, we as intraday traders can misread it to think, oh, this is tons of momentum to the upside. This market's going to go straight up all day. You know, woo, it's super bullish. That is not necessarily true. This entire move up today could be purely shorts covering without anyone new going long. And so as soon as that last seller has been taken out, right? That last person with a huge number of contracts going short, and they're waiting and they're hoping this market reverses. As soon as we finally poke up and take out those stops, wherever they may be, they might be up here around 59.40. They might be up here around 59.50. Wherever those stops are, there's a good chance this market's going to turn around and immediately start heading right back down. Okay. I am in particular very interested to see where the market is whenever we get back to the zero line on the ticks. Okay. Because right now this is reading to me as more short covering and FOMO buying and less, strong hand dip buying. And so when you have FOMO taking you up, guess what the market inevitably will do when that FOMO runs out? Boo, 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 boo. Come right back down. Okay. So this feels very bullish. It feels very exciting, but remember, it will come to an end abruptly whenever that last seller gets squeezed if we don't start to bring in strong hands buyers. And we won't bring in any strong hand buyers until the ticks get above the zero line. So food for thought. Momentum's still up, but I don't think it's going to go up all day. I think we are hunting for that reversal level. And to be clear, we have not found it yet. Laura says NQ, please. Yeah, let's take a look at the Q. See what it's going to do. Okay, so the NQ had a much harder time filling its gap. They just filled the gap. Okay, so now you at the NQ are watching for resistance right now. 21,318. This is the low from Friday. So if the market wants to continue lower today, this is where stronger hand sellers would start to pile in and push the market lower. The NQ, like the ES, has a weak low. So there is absolutely a chance that whenever the market finds resistance, it could come back to the opening price. But the more time and the more volume they bring in now above Friday's low, the more likely they are to start retracing Friday's range. So yeah, I would say both markets are in exactly the same position. They are temporarily at this moment bullish. Okay, look, we just took out another 200 stops. One poor guy just got taken out for 277 contracts. I just think we're hunting for that stop level, and then we reverse and come back down, both markets. But we have not found it yet. So the momentum continues. Okay, 500 stops. Here we go. Now we're cooking with gasoline. Now we're taking out some big boys. Sucks to be them. TF says, how many ticks per row do you have on your TPO? So right now I'm in 2 tick increments. So each letter represents 50 cents of price. Holden a Fart says, so the momentum and buyers are weak hands? Yes. So the intraday buyers today, from the moment the market opened, look at the open. What did the market do the minute it opened? It went straight up. It did not go down at all. So no one today has been able to buy a dip. No one has been able to wait and buy. Wait for the market to pull back into support and buy. So that means there's only 2 people that are going long right now. One are shorts who got short on Friday or over the weekend, and they're exiting their shorts. That's what we call short covering. That causes the market to start to move. And then FOMO buyers who are chasing price on the way up. Now, the difference between FOMO buyers that chase price on the way up, just the behavior of these types of participants, the buyers that are chasing price intraday on the way up, those tend to be very short-term traders. So these are scalpers, right? Who are in and out of their trades, in a matter of minutes. And they're day traders like you and I that are operating at a shorter time frame. And so the thing about traders like us, scalpers and day traders, is we don't stay in our trades for very long. We take profits. So that's the thing, is that's what makes us weak hands. We're going to get out of that trade as soon as we see a reason to, whether it's because we think the market has gone up so far, we should take profits, or it starts coming back down and we don't want to give back any of our profits. We are not going to stay in that trade until we get all the way to Friday's high. It's just not going to happen. Whereas if the market had opened this morning and it had first dipped and gone down a little bit, let's say to like 5,900, then found support and come up, and we were in the exact same place right now, I'd be saying this thing could keep going all day. I'd be saying this is strong. This thing could go for hours and hours. We could just keep pushing and pushing higher and higher and higher. But that's not what's happening. Instead, this move up is shorts covering and FOMO buying, which means we're not going to push forever. We are going to run out of steam. This market is going to make its high. We may have just done it right now with these 500 contracts, and then that's it. And once it turns around and starts coming back down, it can come all the way back down to the opening price now, because the move up was not bullish because strong hands were buying. The move up was just to squeeze that guy right there. That's what the market wanted. It wanted to take out this poor schmuck for 500 contracts at 59.42. And so it had to go up first. It had to open and go up to take that person out. But now that they have, we need to convince a whole lot of new people to go long up here if we want to keep this momentum going. That's the difference between short covering and dip buying. Weak hands versus strong hands. Another thing that is worth mentioning is this idea of momentum in the initial balance versus momentum after the initial balance. So often when the market makes a really big move in the first hour of the day, as it is here, where it seems to just be moving straight in one direction nonstop, often a majority of whatever the move is going to happen that day will be done by the end of the first hour. So like, let's say the market were to stay right here and the B period were to print in 7 minutes and the market were to push higher. We're to push up to here in the B period. When we print the C, the odds are it's not going to keep going way higher. It could poke up above the high, but it won't go very far. It'll run out of steam and then come back down. Or we'll print the C and immediately start heading for the low. And as soon as they get a little bit below here, it'll run out of steam and come back up. That's just a general thing about the ES, is that if a lot of price volatility happens in the first hour, most of the volatility of the day will have been over. And you just get a little bit of range extension, but not much. Whereas if you have a really tight first hour where the market is just chopping in a really tight range, then you can expect to get a big range extension later on in the day. But everything to me now is pointing to the idea that this market is going to make a high and come right back down through the opening price. And so we haven't made it yet. We're still bringing in new buyers at the high, but it's coming. This would be a great time to click back and look at those ticks and see if we've made it to the zero line yet. It's not quite. So yeah, we could still, this whole move even now could still be shorts covering and FOMO buying. And that will come to an end. It looks like now they want to test this overnight high around 59.48, and we will look for the reversal there instead. Danny in the house, good morning to you. My pleasure, Laura. Any other questions? I'm only here for 5 more minutes, you guys. You got me for 5 momentos. If you got the questions, now is the time. I don't know why I just went into that accent. That was weird. Oh, we got some peeps hanging out in the Discord. What up, Steven? Welcome, welcome. Good to see you. Does Man in the house. He says, could you please speak more about the tick chart you just mentioned? Why do you think price needs to be above the zero line? So the tick chart is a market internal. It is basically, please don't make me say the exact thing it's doing. It's measuring the stocks in the NYSE that are going up a tick and subtracting the stocks that are going down a tick. So it is basically just measuring the stocks going up versus the stocks going down. Does that make sense? In the overall NYSE, like all the stocks that are exchanged there, okay? And so when it is above zero, that is a sign that more participants are going long than short. If it is below zero, that is a sign that more are going short than long. Now, it is also based on the direction it is moving. So it started this morning at negative 1,500, and it has worked its way back to zero. So obviously, that is more buying, right? To get from negative 1,500 to zero, a lot more people have to be buying stocks than selling them. But once we get back to the zero, anything can happen. At that point, you have squeezed any shorts that were left to squeeze. So anybody that was selling in the overnight, they're almost all out of their shorts now, right? That's what will, it's just, the two aren't exactly correlated, but they just tend to work out this way. Don't like overthink the why it works out this way, but just generally speaking, when the market opens and it's oversold on the ticks, by the time it gets back to the zero, that's when you have squeezed whoever you're going to squeeze. So that takes out a lot of that buying pressure. which are shorts that are covering. So to keep going from there, what do you need? You need new buyers. You need people right now today to choose to go in and buy those stocks in order for the, ticks to be able to keep going beyond zero to the upside. And if people are buying stocks, guess what the futures are going to do? They're going to go up. So when we get to that zero line, that's a great place to see, does it reverse? Does it start coming back down, or does it keep going? And it looks like coincidentally today, we're going to be pushing right into the resistance, right above the overnight high. So this is just a perfect place for the market to run out of steam and reverse back down. So let's watch what happens with those ticks at that moment when we're there. What's happening with them right now doesn't matter. It's when we get there to that resistance level that we'll watch. For now, I'm focused on the icebergs. What are the icebergs telling me? Well, we got a magnet sitting down here around 59.32, So this market, whenever it makes that final high, guess where it's going to come back down to? 32 to test support. As long as this iceberg is still here when it gets there. This could, of course, disappear at any moment. They could choose to just get rid of it and cancel it. But as long as this is still here, it means that whenever the high is made, we're coming back to test it. And we just haven't quite made that high yet. But I feel like we are awfully close. Lots of confluences lining up here. The ticks, the overnight range, all of it. All right, and with that, unfortunately, I must say goodbye. Au revoir, farewell to you and you and you. If you're a member of the Piratetraders Brigade, so I run a community called the Piratetraders. We have a membership group called the Brigade. It costs $20 a month to join, and you get access to these live streams every single weekday. So Monday to Friday, I live stream for the first hour every day. And most days I live stream for much longer, but just guaranteed first hour every day. And I give my insights. I also send out an email every day with the levels of interest to take profits if you are looking to trade that day. I'm pretty sure we're about to take out the last, or we may have just taken out the last profit target to the upside from today's email. So those are in the emails. It's $20 a month. It's awesome. You should join. If you are interested in doing that, you just go to piratetraders.io/join. You can see the link in the top of the video here. And we'd love to have you. $20 a month. You can quit anytime. So if you sign up and you don't like it, it only costs you $20, which is, less than 2 ticks on the ES. No sweat whatsoever. And we hang out every day. If you are not a member of the Brigade, and so you don't like me, you don't want to hang out with me, you're like, I hate this guy, Bruce will be starting his live stream here shortly. Head on over there right here on the Bookmap YouTube channel. Bruce is fantastic, and he is great at answering questions. So there you go. Another poor schmuck taken out for 560 contracts. This is what I was talking about earlier when I said, we took out the first big number of contracts down here. And I said, they got to keep taking out these huge stops if they want to keep the market going higher. Well, it's working. A lot of big players shorted the market over the weekend, and they are all regretting it now. So at this point, we're now watching 59.47. This should become support if they're going to keep going to the upside. This should become support, and then we make that move higher. If it does not, if we pull back down and the overnight high does not become support, I would look to come back and test 59.32, where that iceberg is, because that was a lot of stops that they just took out. And that's the thing about this concept of like, if they're just short covering, if they're just pushing up to take out sellers and take out sellers and take out sellers, you never know how far they're going to push, because you never know where the stops are. Right? You just have to wait until it gets there, wait until it rolls over, then look for the next thing. So if you are trying to long this market, do not fall in love with your longs. This thing is fixing to reverse at any moment. Now, right now, at this moment, it's still saying it's going to keep going up. But if the overnight high, if this area right here around 59.48 does not hold, then it's going to pull back down. Okay. So for now, the momentum is still up and they could keep pushing it. It'll shock you how far they can push it, but just don't fall in love with long trades, because whenever it runs out of steam, there's a very real chance it comes all the way back down. All right. With that, I will say goodbye. Thank you, everyone. Have a great rest of your day.